Good morning. Welcome. I'm Neeraj Shah, and you're watching the trade setup. It's an interesting day of trade simply because the Fed minutes didn't turn out to be as hawkish as people anticipated. Now, keep in mind, this is what the US markets did first. Let's get the market cues and then get the global roundup going. So this is what the US markets did in trade yesterday. Not too bad, you would have to say. The Nasdaq in particular up about 1.5%. And frankly, if you look at the other cues as well, from a market's perspective, which is what's happening to risk assets like Bitcoin, what's happening to 10-year treasury yield, or what's happening to CBOE VIX. Well, don't give any particular cue, if you will. I mean, usually you would expect that a risk return would lead to Bitcoin and some of the other asset classes doing well, but that stayed sub 30,000. But the VIX did come off a little bit. The 10-year yield roughly around the level that it was supposed to. So no great shakes out there. When it comes to the US markets, the 10-year yield number seems a bit off. But be that as it may, what I can assure you is that there was no big gyration in the 10-year yield either. So yeah, let's see this play talk. But yeah, this is what the rounds, the setup per se is. Now this is the global roundup, viewers. I think the Federal Reserve minutes struck a less hawkish note than what the markets had anticipated, and which is probably good news. Though maybe they run the Fed rate hikes might run deeper than what people previously envisaged, but no larger than 50 basis points hikes in the near future. That's music to the ears for a market which is now like a cat on a hot tin roof, so to say. China is going to miss the growth target by a wide margin. I think the anticipation was that they would probably do about 5.5%. Now, after the comments yesterday, it seems that China may actually dole out a 4.5% yearly growth target. In a world startup growth, it needs China and India to grow, but because of the lockdown measures in China, that economy is not likely to grow at a pace that it was earlier expected to. Bank of Korea has raised its key interest rates about today. And remember, Bank of Korea and Bank of New Zealand are the two central banks which had their key rates meetings this week. And in today's session, you will see the US GDP and the initial jobless claims to come out, and therefore all eyes would be on how badly is the US GDP impacted because of the Russia-Ukraine conflict, as well as because of the supply chain snarls, more importantly, that are emanating out of China. So net, this is the global roundup. Let's quickly look at the SGX Nifty and then try and move on to the trade setup as well. So this is what the SGX Nifty is indicating, about a 0.5% start. Now remember, yesterday was yet another day wherein the market breadth was not positive. 3 days on a trot now. We've had the advanced decline ratio not looking all that great, 79 to 422, and a clutch of stocks falling apart really, and a fairly interesting name. So Gujarat Ambuja Exports has got a large capex on stream already, and they should benefit, but no, not happening. Delta Corp, the economy is open, India in particular. It should likely do well, but maybe because of the taxation issues, down about 9%, or because of the markets coming off per se. Welspun Corp had a 9% downtick as well. Fertilizer companies continue to grind lower. So in that sense, it wasn't the best of days. Concor, because of the LLF issues getting resolved, likely resolved, up about 6%. Minda, because of this yesterday we spoke about the results and Nomura upgrading the stock, so that one was up about 6% yesterday. So few stocks, few and far in between did okay, but otherwise it was largely ball of gloom. Now, what's the trade setup there for? To my mind, no sectoral indications at all. I think just the fact that the market seems to be using rebounds to create shorts, and that is the favored template. The Nifty Mid-Cap Index, in fact, has resumed its lower top, lower bottom structure after yesterday's downtick. Some people call it capitulation. I believe we are far from that. And staying light on overnight trading positions might be the advisable strategy, really, irrespective of which sector you're trading at. What are the stocks, therefore, to watch, though, in the session today is the key point, right? I mean, we can all argue about what the medium-term trading template seems to be, but what matters is also what can you do for the day-to-day, and what are the stocks that are likely to move. And you should know the reasons at least, right? So one is, of course, BPCL, the numbers came out, revenues up 24%, EBITDA margin 4.8 though, and net profit corrected 73%. Now these numbers optically look a bit of a mixed bag, and BPCL has a lot more going around it. and therefore I thought the brokerage view is probably more important in this case now that the numbers are out. So Jefferies maintains the buy with a target of 465. They are saying there's an, even though EBITDA margins have come off, the EBITDA per se, total EBITDA, there's an 18% EBITDA beat on higher marketing, which is a large inventory gains therefore for BPCL, and higher realized refining margins. The refining margins have now risen sharply, observes Jefferies, but with ONCs currently making about a 10 to 15 rupee loss per litre loss in auto fuel marketing, and BPCL marketing volumes are about 1.4 times its refining throughput. They have cut the FY23 EBITDA by 50%. That tells you something. But because the valuations are benign at 1.5 times price to book versus the past cycle average of 2.4, they remain constructive with a buy and a target price of 465, which is being maintained. Would BPCL therefore see an outright run today? No. If anything, could it fall today? Sure, it could. But the valuations are supportive, and this, viewers, keep in mind, despite yields coming off a little bit, the market is still not going for buying growth. The market is still focused on value buying, and therefore, unlike high-priced IT or some of the other consumer names that are running the flavor immediately, you might still have the markets wanting to buy into stocks which offer value, maybe some dividend yield, maybe something else. So keep that at the back of your mind. Coal India is the other one, wherein the revenues numbers, 32,706 crores ahead of Bloomberg estimates, EBITDA margin at 27.76 ahead of Bloomberg estimates, net profit at 6692 ahead of estimates as well. So compared to most estimates, Coal India did really well. The Credit Suisse note on Coal India is interesting. It's an outperform. They've raised the target price to 250 from 225. They say that the 4Q FY22 beat was driven by higher FSA realizations and lower costs, and receivables have fallen as well. The EPS estimates for FY23 and 24 rise by 2% and 14% respectively. Believe volume growth and higher unit realization should aid profitability, and wage hikes and FSA price changes are the key events to watch out for. Remember, they haven't had significant wage hikes for a while now, so it'll be interesting to see what kind of impact would something like that have. But net, not bad numbers, not bad outlooks as well. Again, fossil fuel, yes, but value. Let's wait and watch if there is some reaction there. Apollo Hospitals is interesting. Can't quite place a finger on it, but this space is clouded by heightened competition and lower unit prices. Their numbers, 24% uptick in revenues, but margins came off compared to estimates. Net profit came off compared to reported numbers and compared to estimates as well. So not the best of quarters. You might want to yes, it's a lot. In terms of just price, it is available at a better price. In terms of valuations, I'm not quite sure. Because the prices come off quite materially from those 50, 200, 50, 100 levels to about 3,500 odd, but doesn't mean much really when the landscape is not necessarily all the best right now for either hospital companies or for diagnostic companies. Healthcare is a space which is attracting a lot of investments. Interglobe Aviation, the more they fly, the more they burn profits, simply because fuel is so expensive. And it showed in the way the numbers came up. Revenues up 29%, which is great, right? But EBITDA margin at 2%, net loss at 1680 crores versus expectations of 832 crores. Now, optically, these numbers look just so shabby that you might want to believe that despite the crash that we've seen in the Indigo stock thus far, can it fall further? Now, maybe it could, I don't know. But the JPM note on Interglobe Aviation is interesting, and I'm bringing you that contrast just to understand how people are thinking now. Not all brokers are thinking this way, but JPM is saying that they are upgrading the stock to an overweight. The target price has been raised to 2,000. Why? Because while 4Q is a miss, the yield trends post-Omicron has surprised them positively. They raised their FY23-24 EBITDA by 20% and 10% to 72 and 98 billion respectively. They estimate net profit of 2.4 billion and 16.5 billion versus the consensus estimates of 20 billion and 41 billion. So they're clearly a lot more optimistic on Indigo. I really don't know that in such a volatile scenario, how can you obviously, I mean, analysts have to do it, so they will. But it's really difficult to envisage that the EBITDA numbers can go to a particular number or the net profit will go to such a heightened growth in FY24, that too, because a lot could happen between now and then. Having said that, the stock has corrected quite strongly. Maybe it corrects a little bit because of the results today as well. But like I said, the yields numbers was good. And if there is some resolution to the conflict and therefore to crude prices, then Indigo, by virtue of having a higher international share currently, could actually do well. So let's wait and watch. I mean, they are certainly an airline of choice, but they are certainly making higher losses with crude being where it is right now. So let's see which way the die rolls. Difficult to say. Whirlpool is the other one wherein the numbers missed estimates, especially the net profit, which was at 79 crores versus estimates of 103 crores. So maybe this is a stock that could have a bit of a reaction too. But these are the ones wherein the cues were largely not that positive. Now let's look at companies which probably came out with either good results or good commentary, or both maybe, right? So Torrent Pharma, revenues were up 10% at 2131, largely in line with estimates. EBITDA largely in line with estimates at 561 versus 572. Margins at 26.3, a slight miss compared to estimates. There was a net loss, which includes an impairment loss taken. So all of these would make you believe that it is a fairly ordinary quarter. Then they've approved a bonus issue, it's okay, really. But I think what's probably worked in Torrent Pharma's benefit, if you will, is what they have said when it comes to the outlook ahead, right? So in the case of Torrent Pharma, and I was looking at some of the brokerage notes that came out, the India growth and Brazil and US have shown higher numbers, and I think what they have indicated is a very strong guidance in FY23. They expect the EBITDA margin to expand by 300 basis points, with a further expansion of 100 basis points in the rest of FY23. So 300 in Q1, 100 basis points rest of FY23, double-digit revenue growth in both India and Brazil in FY23. So the guidance is fairly strong, and therefore Torrent could well be an interesting stock to monitor, as could be BATA, really. Revenues were up 13% at 665 crores. The point is, viewers, in the same time period, which is Q4, BATA has executed a 13% growth. Khadim and Relaxo recorded a degrowth of 42% and 6.6% respectively. Probably shows something that BATA has done, which is right. And remember, BATA is, like, a large leader by in the country as well. So they've done reasonably well on the revenue front. EBITDA expanded, EBITDA margin expanded, net profit up 114%. Difficult really to find a fault. Most brokerages and most analysts are waiting for the con call today to give their verdict. But just the relative growth numbers as well as the performance on the EBITDA and the bottom line seems to suggest that BATA has done really well. Sneakers have led the gains for BATA this time around. It could be an interesting day for the stock of BATA India. Some other results impact might be seen on GMM Pfaudler, wherein while the results look strong YOY, but they've slipped materially quarter on quarter. Let's see if the stock reacts accordingly. They've also issued a bonus, I think 2:1, 2 shares for 1 share held. So it could be interesting. Nalco, strong Q4, but the metals outlook is weak. Suprajit Engineering, it was a challenging quarter, but I think the EBITDA margins expanded to 15.1 versus what was a consensus estimate of 13.7. So even that could be something that the street might like. So let's wait and watch what happens to this one as well. Remember, like I said, there could be some results and some reactions which could be very different. Like Nalco is a sharp top-down beat. I've actually forgotten to mention Praj Industries, a very strong set of numbers. The top line growth was the highest in any quarter. EBITDA probably the highest in any quarter in history, and all of that. So they did really, really well. But it's not a cheap stock per se, and you will hear the management today. We do a slightly longer conversation with Shishir Joshipura. It'll be live at 2:30 p.m. today, so you might want to tune in for that as well. Emami Paper Mills and Asahi India also had fairly strong set of numbers. So I think it could be interesting to see what happens to all of those stocks as well. Net, Torrent, BATA, Praj Industries, Suprajit, Nalco, all of these seem strong numbers. Coal India seems strong. At the other end, BPCL slightly iffy. Interglobe Aviation iffy numbers, but certain brokerage is bullish. And the SGX Nifty showing a trend which could be marginally higher. So place your bets accordingly. But be careful with any kind of trading bets. that you might be wanting to take, because the market seems to be following a template which is create shorts at every high level. Thanks so much for tuning in, and stay safe.